Hello everyone, so today's video is multiple time frame entry. Now it depends on you and how you enter your trade, let me use that word, and how you view the market. Everybody views the market in a different way. It depends on them and how they view the market, but I want to show you a very simple way on how you can actually use this for your own benefit. Now for a day trading, we have the 4 hours, 1 hour, 15 minutes. Some go as low as 5 minutes, 1 minute, but I didn't put that here. Swing trading is more of 1 day, 4 hours, and 1 hour, 15 minutes, but we usually stop at 1 hour. Now I'm going to start with 1 day, what everybody is seeing as 1 day. Based on the instruction being given to us by I.C.T himself, Michael Hudson, he said that we're going to count 4 candles behind, each candle closing like behind each other. Example, 1 candle, this is 1 candle, this is 1 candle, 1. So this candle closed below this one, so this is 1, 2, and this is the 3rd candle. So we'll count. But if you look at this candle if you look around here very well, I don't want to be fast though, so you can understand me better. You can see that if you put your line here, market did not break out with a body, market broke out with a wick. So we'll be looking for the closest break of structure around here, and the closest break of structure took place below here. If you're on 1 day chart, you draw your Fibonacci from the high to the low. Below here, we'll be looking for our reference point, that's the fair value gap, other block, and other things that are important to us. This is the closest fair value gap below. This is the closest fair value gap below 150, and this is another one here below also 150. This is a fair value gap here. Don't forget your premium and your discounts. Don't forget your premium and discount. So this is the discount area of GBP USD. This is the discount. So we'll be looking for buy inside here, and here will be full of sell momentum. But you don't enter. This analysis helps you to get a good confidence when you want to enter the trade using the multiple time entry scenario. Now I can come down to 4 hours. For those that are day trading, they start their higher time frame from 4 hours, but they go and look at 1 day just to see what 1 day is giving them, which is a more of a bullish momentum. But on 1 day we saw that we are in the premium zone, but market has not yet shifted structure. What I do majority of the time is I always put a line, because I always assume market has broken structure. But when I put a line here, I can see that it came out with a body. There is a guarantee that market has broken structure. Then what do I do next? I'm still in a bullish momentum on 4 hours. Many people hire bigger time frame is 4 hours. Then I will take my Fibonacci and I'll put it from the low to the high of where market broke my structure. Now I want to make this very big and very sweet. Oh, sorry about that. Very nice for you to do. Now don't forget, below is what? Discount, while above is premium. But you can see 2 double top here. That is also a sign of equal low. Now if I look inside here, this whole area, made up my mind to be using the whole box. This whole area is an order block on 4 hours. Can you see it? Now if you look inside here very well, inside that 4 hours, what do I have here? I have a what? I have a, is there a fair value gap there? Okay, I have a fair value gap here, a minor one here. You can see it. There's a fair value gap here on 4 hours. That means if markets get down here, there's high tendency markets can react around here. You can label it for your own convenience. You can come here and tap in 4 hours here, and just to remind you that that area is a fair value gap of 4 hours. Okay, then what again? This is still below discount. We have our other block. Is there mitigation block? No. Is there a breaker block? No. Is there liquidity void? No. Now the upper side is our premium zone for a sell momentum. Then it can come down to 1 hour. On 1 hour, some people do take trades here also, because if I draw, this is a break of structure here, this is a break of structure here. For those that do day trading, and they will take this below as their order block. this low as their other block, but you can see they would have been liquidated in. But now I'll be looking for markets. If I want to take this trade, I'll be looking, if I want to counter trade, for markets to break down this low for me to take a trade. Then I can come down to as low as 15 minutes. In 15 minutes, you can see I was being liquidated here, but not with a body, but with a wick. In 15 minutes, for those that want to day trade, I'll be looking for a change in character, either for a mitigation block or a breaker block. And you can see market is still buying. Market is still buying. It is doing its wonders. You can see market is still buying. And what happened here? Okay, I didn't catch it on time. You can see that there was a shift in market structure here. And we had what? We had a breaker block here. You can see there's a breaker block. Another confluence number 2, there's also a liquidity void. You would have also marked this upper side as a mitigation block also here, but market did not get down there. And also you can see, if you go back to your 1 day, your 1 hour, you would have seen that market shifted structure. Let me not use that sign. Market shifted structure on 1 hour. You can come back to 1 hour and be looking for another shift of structure, and you can see that on 1 hour there was also a break of structure inside here. This is how we enter the multiple time entry scenario. Then some people will take that sell, that opportunity to catch the sell from the breaker block. Some people will take that sell here, and their stop loss will be here, and they will target that area of, they will target here, or they will target here on 4 hours. They will target that area, and you can see what market did. You can see that we hit TP, and you can see we're already in the 1 hour. That's how you get a good risk to reward. And you can see it have done you 1:1.4. And even though I come down here, I can still take it for a buy, because what I did was a counter trading for a buy, in the sense that it is in my fair value gap. Let me delete this one. It's in my fair value gap. Let me draw the line for 4 hours. You can see that, right? And you can see that here is a swing point for market to shift. I can come down to as low as 15 minutes. This is for 1 hour. On 15 minutes, I can see this also as a swing point. You can see this, right? And I'll wait for market to break it. If market doesn't break it, you can see, you mark this. What do you see here? You see what? A breaker block. Do you see a breaker block? But you can use your Fibonacci, take it from the high to the low, and you enter. It depends on how much of Fibonacci gives you. Hold on, let me show you very well. You enter. Let's see. We hit stop loss. Let's go. This is for those that want to day trade. We hit stop loss, and let's keep going. We all know that this is still a support zone. This is still a support zone. You can see what happened here. Market was still shifted structure. While still this whole zone is still a support zone. This whole environment is still support. Then I'll take my, to make it very easy for you, I'll take my Fibonacci from the high to the low. From the high to the low. What do I see here? I see a minor fair value gap here. Oh, let me not use that color. Let me use this one. I see a fair value gap inside my support zone as a confluence, and I can see this as an SND, but I'm not used to SND. Another stop loss in the same support zone. Very annoying. 2 stop loss. We're still in the support zone. I'm just trying to find a good confluence. But if you use 1 hour, 1 hour has not still shown me an entry yet, but I'm still in the support zone, so I'm not worried. I'm not worried. I'm not still worried. Okay. I'm not worried because I'm in a support zone. A market shifted structure here again. If you look inside here, if you want to follow the minor noise happening inside here, this is a noise to me. You can still find entry here, swing point, mitigation block. But if you want to use the overall scenario here, you take a Fibonacci from the high to the low, and you can go back to 1 hour to see a brighter picture of what is happening there. And let's see what happens. I'm still in my support zone. I'm not worried. And you can see market hit the what? The fair value gap here, but in a support in the discount area. And if I go back to my 15 minutes, I can look at that zone here, break of structure. This is also a support zone area, and you can enter your trade from there. Take your Fibonacci, your long position, but I will take it from inside here. The market acting very crazy there, and you can hit your TP from around here. You can see I hit 3 stop loss. This is the disadvantage of being conservative trading, because you can hit stop loss in a ridiculous manner. You can be hitting stop loss in an annoying way, and it's very, very annoying. But it's also in that support area. Now the problem is trying to find an entry. I can put my stop loss here, put my stop loss here. It still depends on me, but I'm still buying in a discount. But this was a manipulation that happened inside here. And if you go down and you're aiming for a good peep, you can see that I'm still in my support area on 4 hours. I'm not afraid. I'm still in my support area in 4 hours. If I go to 4 hours, I'm still in the support area in 4 hours. You can see I almost hit stop loss. Do you see it? Do you see it? Or would you have hit stop loss? This is the painful thing about being a conservative trader. You can see that it did a shift in market structure. Another block was here. Do you see it? And the TP is actually here. Up here is still my support area, but what would have happened? I would have hit a lot of stop loss before hitting my TP, and you can see very painful. I'm hitting a lot of stop loss, but this is how conservative trading is, trying to find an entry, a good entry that can give you an amazing stop loss with a greater pips. But if you can go to 50, that's why I don't really like 15 minutes, but this is how a conservative trading method works. We saw 2 shift of market structure, we got liquidated. Market shifted structure again, we got liquidated. So we're not doing anything wrong, we're following the rules and regulation. So in case you encounter something like this, you are not wrong. You are not wrong, you're right entirely. Now if I draw my Fibonacci here on the discount area, you will notice that there was a fair value gap around here under the discount. There was a fair value gap here. What again did we have? We had an order block here on 15 minutes. But if I go to my 1 hour chart, I still had the fair value gap, but a bigger one. And what do I have here? I had an order block around here. The market came down here to mitigate. You can see that, right? So you are not wrong. But now this is the difference between you being an aggressive trader and a conservative trader. A conservative trader immediately enters the 4 hours OB, just refine it to 1 hour. Yeah, enter trade. Like, he doesn't want stress. He enter the trade and he's going his way. But you're trying to get a good entry, wait for market to shift structure. You got liquidated and market still went your way. But I would have still hit stop loss in a way, but I didn't hit. It almost hit my stop loss. Can you see it? It almost hit my stop loss. And it came back to what? To mitigate what? Our mitigation block inside here. So this is the difference between how you can find entry with different multiple entry, and you can get amazing pips. You see 1 to 4, 1 to 5, 1 to 6. And I hope this video was helpful to you. Thank you very much.